Hello, everybody. It is Tuesday over here, the 22nd of January. Hope everybody had a tremendous day in the market today. And as opposed to Facebook, so I'm getting Facebook set up real quick as I talk to you. That's the best part about there we go. That's the best part about live once again. You get the full experience. Oh, and I got a notification today. We'll go into that. I still don't have the charts over here, but Facebook does. So check out my page over there. And hopefully Facebook doesn't take a poop on me today. Okay, hello Facebook. We're live here too. Excellent. All right, time to get started. Pretty wacky day today. I gotta say, it was very violent, which you would expect that kind of thing when you start getting that far away from those short-term moving averages. Exactly to expect. I mean, I've been tweaking my system. I like to say, since I've been doing all this, to all of you. So time frames like the ADMA, and they're just such helpful tools to have, even if you're an average person. I keep the 8 EMA, the 20, the 50, and the 200 on my chart, as well as the TD sequential with setup trend, because that's really the indicator I've actually done reading on and research. So not just exclusively from Tone Base, but I have the book. His podcast introduced me to it, and like I do with all other things, and this is constantly what I preach. There's nothing wrong with piggybacking somebody else's idea. I mean, there really isn't. But you take that idea and you make it your own by doing research, running back tests. You're not just blindly following people just because they say something. And that's what I've done with the sequential, which I'm really kind of waning off of at this point. Not in a market like this. I think it works better in a trending market to the upside. But, so these are the things that you learn. So really, S&Ps, they got hammered today. But really what I've been watching, because I've been playing these downswings a little bit differently, is I've been watching the T-bond futures. So 30-year bond futures, we had a pretty substantial move today. Low, high, 23. Yeah, I still don't understand the pricing on these things sometimes. It's very, very weird to me how this all works, because you see 144.17 at the open, and then you see 145.08 at the close. So that's 23 ticks. What I don't understand is, that would be, what's the number I'm looking for? 80. Perhaps it's just how these things are priced, but looking at the chart, who really cares? Like, I don't actually trade the bond futures. I trade the TLT ETF, which and I've looked into this before. If you line up the TLT ETF with the bond futures price, it's pretty close. The leveraged instruments, I think, give you more insight. That's why, as I've talked about in the past, I consistently look at the futures for anything. If that market has them, And considering that, I'm not trading like individual bonds, I'm trading TLT, which tracks an index. The bond futures are very helpful, and because it's 20 plus year, I use the T bond futures, the longer term bonds. And it just gives you a really good idea of what's going on. Now, for every penny it's close enough to where I can reference ZB1 and feel totally comfortable trading TLT off of the ZB chart. Another good one, and I'm going to go ahead and add this to my watch list while we're doing this, is the 10-year, which is ZN 10-year note. This is the one everybody watches. The 10-year bond. Everybody, sir, eye on this thing. I don't, and there is an ETF off the top of my head. I can't remember what it is. That tracks some of the short. I think it's a 7 to 10-year bond index, I believe. I just stick to TLT. It's just, in my world, it's just easier to pick a handful of products that gives you exposure to most markets, as opposed to like, okay, I have one call option and TLT and one in this other one that's 3 to 5 years, and this one that's 7 to 10 years. If I'm trading bonds, I'm in TLT. Bottom line, that's for simplicity's sake. I got enough on my mind. I don't have time to be sitting here thinking about all this other jazz. But anywho, in regard to bonds, with that pop, we did, and I've been watching this one. I put I put the idea back on TradingView, so you can go ahead and see that I was watching for a little bit lower prices in bonds. I was looking for 143 on ZB1, but I don't always get them right. And with today's strength coinciding with today's stock market weakness, that is enough for me to get a bond position. I only pick up one contract. I'm not trading big. If I was doing 10 lots, I probably would have picked up 2 or 3 contracts today, and then if it confirms, I'd pick up the bulk of my position and then put a little bit more on later. Since I'm doing the 1 lots, that's it. My position's on, and we want to see be right. We are above that ADMA. Did close above there today, which is what I really like to see, which is fantastic. And we did have the 200-day moving average was a little bit sideways to downward on this is a 200-day moving average. It's just starting to turn down. 50 was coming up. I think that's enough to call this a golden cross. I'm comfortable with that. Whenever there's a golden cross, there usually is pretty big moves coming behind it. Excuse me, in front of it. Moving averages are waning. So pretty comfortable. And this is how I'm playing the downside once again. I prefer it this way. And I'm going to go into the VIX after we hit these stocks. We're doing ES and SPX. So ES right now, 1.5 points. That's nothing. So not a whole lot to write home about just yet. But this is a classic example. You just get way too extended up here, and then they pull it back. That's going to be the enemy. We did bounce off of 50 today in the E-mini contract, which at this point looks like it could be just a retest, which is why I did not short the S&P itself. But I think that's enough to get people scared here. and it would be enough to push people into bonds. So that's why I went long bonds. So technicals as well as correlations, seeing a little bit of scariness, a little bit of shakiness in this market. So I'm taking a long bond position instead of short stock position. Short stock, I need to see more confirmation before I short an index. We'll talk about the short position that I have, the only stock position that's short right now. Man, I got this mark on my shirt. I don't know what it is. Maybe I should stop wearing this red shirt all the time. But you know what? I ain't got time for all that outfit stuff and whatever. So crude oil, wow, pretty big gap up here off the open. We're already off the close. Still a tight range, so it looks like it's about 40 cents it gapped up crude oil. Pretty nice move there. Crude oil is another thing I've been watching to get an idea of where the stock market's going. Oh my goodness. And the crude is above that 50, and it looks like it's holding right now. So we did break out above. If you're going to like a shorter term time frame, this 52.35 area was a breakout, and today, excuse me, we live in the middle of nowhere. Sometimes you hear weird noises. Well, anywho, so I probably would not be doing anything crude. Not a lot to write home there. These people around here are weird. Anywho, no NQ, no Dow. Actually, you know what? I do want to compare one thing here between the Dow futures and the ES. Off the low. Yeah, the Dow did come up. Just a tad bit more. I'm sorry, like YouTube, I keep. Another real telltale sign is the dollar. Dollars, we kind of got this doji situation going on now where we have two of them in a row. 6, today's a 7 on the dollar. I have talked about the potential for dollars strength coming in here. However, the euro does look a little bit extended, and that's the only one you'll notice I cover when it comes to the dollar, because I'm still using DXY. I still have not changed over to that. Oh my goodness, excuse me. I do apologize. I still have not switched over to that Bloomberg index for whatever reason. I just haven't gotten around to it. So for now, while I'm using DXY, and DXY seems to be pretty consistent with what's going on in the more dollar correlated commodities, where it's looks okay. So the euro, yeah, they did buy this thing up off the low today, getting as low as about, here, I'll just give you the exact low instead of trying to guess. 113.36, and they did bring it back up about 30 pips off that low to, I don't know what the exact number is. Yeah, they closed at 13.59, so they brought that thing quite a ways off the low. And I would imagine, because I heard a little bird told me that the Fed was talking about, we're not raising rates this year. Of course, that's going to hurt the dollar. Where are they going? The euro. I don't know why. I think that's a terrible idea. I would not want to be in the euro right now for anything long term. And when I say they, uh, hedge funds, retail guys, myself, and everybody else, forget about it. You're not the one that are making things happen in forex. Forex is the one that are doing a lot of the. They're the traders. They're the ones that are moving billions, trillions of dollars. It's not us. And I would hope that they're smart enough to not be buying a currency of an economy that's really just getting dragged down. There is one other FX pair that I'm going to go into tonight because for whatever reason it has like high correlation to the stock market. It's supposed to be like a safe haven, the yen, Japanese currency, which once again very strange to me. So this is Owanda Forex broker. I don't really care. I mean, these things are usually pretty tight. So when it comes to Forex brokers, if I'm going to trade Forex, I'm going to do it through an ETF. I'm not going to do it through one of these spot brokers because I don't trust them. The yen is probably, I would have to say, I'd be buying right now. Let's see, so I get so whacked out with Forex sometimes. So you're going to want a long US dollar yen pair. Buy dollars, sell yen. Which is weird. But that's what the chart says, and you got a little bit of a death cross coming in here. Typical bearish. Short term, that would look more like a buy, because when I talk about do a whole lot with Forex, because I just don't like the way that these things move, but that's my opinion, but I'm not particularly keen on Forex. So I'm just throwing some ideas out there because sometimes this can be useful. And when I'm talking about Forex, I'm talking about 24 hours, versus what I would be putting on. So you got about 2 more days according to sequential. I don't like the idea of a long. So I think that the yen, US dollar yen pair would be better. Just to be patient and short. See if you get above this 109.80 level. If you break hard above that, maybe you have 2-3 more days afterwards to the upside, but I probably wouldn't be a buyer there. See, I could just talk to you about everything else. When it comes to this Forex stuff, it just makes my brain spin. So that's why I just only talk about the euro in relation to the dollar. For this reason right here. Gold. It's pretty big volume today in gold. I put on a short position today in gold because of that's a beautiful setup there for a short position. Everything was in line there, and it just didn't work out. You saw the dollar pretty sideways. The fact that they did this today with the stock market continued to be all afraid. That it just only makes sense that they're going in gold, which is a safe haven asset at the end of the day. I don't think people are quite so involved in gold like they may have been at one time, but it's still an indicator. That, if I didn't know what I know about silver, I would say that is a beautiful buying opportunity right there. Look at that. You have massive, massive selling, and they buy this thing up and support right on a major moving average. That would be a beautiful bicep on my world, but I don't like playing with silver that much unless it's something like this. Two going above a one beautifully out of a breaking out of a channel. If it's not a perfect setup like that in silver, I will not take it because they'll hurt you. And here's an article that I want to talk about because they're bringing it up with gold. Gold price prediction, gold rebounds and cancellations of China in U.S. trade talks. So ignore the word gold in here. This is a Yahoo Finance article. I'm going to read the first portion because I don't care about the technical analysis part. We're doing this specifically for lowering the dollar eases against most major currencies. New that U.S. News, Yahoo Finance, nice type up there. And it's my fault for being a teleprompter reader. Knew that U.S. trade representatives called off a trade meeting as differences were too wide at this current juncture. Stock prices moved lower, which buoyed treasury prices and lowered yields, paving the way for higher goodbye. Yeah, they called off a trade meeting, so forget about anything with China. That's it. That's a nail in the coffin. That's just what I wanted to read. Let's see, confirm. Okay, so we're not touching silver, even though that is a beautiful. I would totally be a buyer in anything. If anything else had that pattern right there, I'd be a buyer. But when it comes to silver, I don't trust it. Bitcoin moderately higher today. Getting rejected at this 3586 level. Haven't had a price flip yet. Not barely any volume, nothing out of the ordinary. We did have a red 13 down here, so typically what would that be? That'd be bullish, but given the segment here, oh my gosh, oh. I'm toast, folks. I'm sorry I keep going, and some days are bananas. So I'd want to see a 13 on the weekly chart, which we don't have. We do have red 2 actually. Oh, look at that. Yeah, I came up to the 8, failed. Bitcoin's still not in a no trade zone. I don't like anything I see. I don't like when it's sideways like this, and if it continues to stay right at that upper portion of the 3500 area, it's just going to be a no trade. That's too much risk. The longer it stays there, the riskier that trade gets, because you don't know. I mean, you get that volatility that starts. What's the word I'm looking for? Totally having a brain fart here. That volatility starts contracting. There you go. Expanding, contracting. Sometimes words just totally slip the mind. I'm still repping Ohio today. Gotta rep the homeland. Water. So as volatility continues to contract in there, the probability of seeing a move in either direction and seeing a very explosive one continues to grow. And since we're already in a downtrend, it's probably better to assume that we're going to continue that downtrend when this volatility starts to expand. So you probably would want to be on the short side here, but I just don't. I don't like trades like that. risk is high, and you can make a lot of money doing something like this. But in the Bitcoin universe, I'll pass. But as you can see, I mean, that's what we did up here. For YouTube people, that's the style where we just sat there and didn't do anything for weeks, actually months. We were in that triangle for months. Excuse me. Oh my goodness. I'm just a distraction mess tonight on both these areas here. Once again, I do apologize. Yeah, Bitcoin, I'm just gonna stay away from you. So natural gas continues to be ugly, and I continue to not have a position. Sometimes you just miss trades. It's just how it goes. Soybeans, pretty vicious day in soybeans. I have a feeling they're going to be impacted by all this China nonsense. Really have a feeling. I did close my position yet. Hang on a moment. This phone drives me crazy. But anywho, so we're going to wait and see what happens to soybeans. I mean, we broke the 200 today. And that looks like a kind of a back test. I did get out actually. I don't know what it is. I just have been on in a bad way lately. Corn did the same thing. Wheat did the same. No, did not do the same thing. I lied. 2 above 1. Wheat looks like the more solid one. I would have assumed wheat would have done the same thing. I did get out of today, even though it ended up supporting right at the 200, and it's probably going to explode tomorrow. I'm not getting back in. I did not put the fixes on my phone watch list. Yeah, I did put a position. This is my other position here because I still have some long positions and I want to hedge them. And if we follow through tomorrow with more downside, I'm going to get out of any long positions that I have. Because I think this, if it's, trading lower tomorrow, we're gone. Once again, instead of shorting an index, I put something on here in the VIX. I use VXY. VIXY. Not only can I not stop sneezing and yawning, but I can't talk today. Must be a pattern. So I bought call options on that VIXY, which is a front month, I believe, ETF. Front month VIX futures ETF. Gapping up out of this doji, super extended, coming above the 80 MA. I really like what I see here. And the VIX. So the VIX is an interesting instrument because the VIX, and you're totally gonna have to correct me because it's a weird product. If I recall, VIX tracks the price of S&P 500 options. So SPX. I said I was going to go over SPX. Well, time's coming up here. So SPX puts, to be precise, if I was not prior. So it's just an index that tracks the price of SPX puts. That just sounds beautiful. Wonderful. Okay, so if it's tracking the price of puts, when the price goes down, this index goes up. And this is typically a hedging tool, VIX. Like you buy call options on the VIX to hedge your stock portfolio. Or you could sell some puts, however you want to do it. I would probably buy calls if you're hedging. You don't want all that risk. Or just like not sell naked options at all if you're hedging or if you're really doing anything. Unless you really know what you're doing. I don't think anybody listening to this is going to be doing naked options. Too concerned about that. So here's cash, and that looks pretty ugly. Retesting the 50 here. Oh my goodness, here's SPX. The futures bouncing off the ADMA here. Yeah, not a lot of volume though, which is something I'd want to see at a reversal area. So if we get a volume spike here, they saw it off one more day and then they reversed it. Didn't quite get that. Perhaps we'll see the same situation here. Maybe the volume will be either early or late. Absolutely toast tonight. Okay, so Lennar, I did put a position on today, right as it was trading higher. Right, they gapped this thing down. They started trading above yesterday's spot puts. Excuse me, a put. And sure enough, it just got devastated from there. Morgan Stanley, yeah, probably that's like an ABC pattern right there in 3 days. If you're okay with counting that. ABC. Yeah, bang. A, B, C. Kind of a half-crocked ABC, but I'll take it. Yeah, I don't like it. I'd like to see an ABC a little bit longer than that. Just my personal preference. Aurora Cannabis. 2 below. Yuck. Yeah, I don't want to touch that guy. Okay, that's about it. 34 minutes is way longer than this needs to be anyways. So I'm going to go ahead and call it a wrap. Alright, YouTube. Clocking out. Good luck.